Hi, it's John Mousseau. I am the President and CEO of Cumberland Advisors and Director of Fixed Income. It is Friday afternoon, July 17th, a week that was pretty quiet, a summer-like week in the bond market, not a lot of movement. 30-year bond maybe down from 134 yield to 132, 10-year bond yield down 0.65 to 0.63. Not a lot of movement. Also not much movement in tax-free bond yields. They were probably down 2-3 ticks in the longer end during the week as well. Deals that came this week in the tax-free bond area. Fairly well subscribed for, some big deals. $2 billion UDC deal backed by the personal income tax of New York. $1.2 billion deal for the Texas Transportation Authority. $1 billion deal for the Port Authority of New York and New Jersey. These deals were subscribed for, not wildly subscribed for. The deals that get the most subscriptions now are the smaller deals that tend to come cheaper, and they still can get 5, 6, 7 times oversubscribed on a fairly cheap deal. We have seen that happen. As we move forward, we expect to see more deals come to market. We think that will happen, especially now that we are back to the same levels that we were, nominally low levels of the end of February. We think that this means that issuers will be coming to market as we go forward. We expect to see some yield rising in here just because you're going to have a lot of issuers now coming to market. These were issuers that didn't come to market when the pandemic was in full-blown effect in March and April. That was an investor's market. This is an issuer's market. So we're biding our time here, waiting for yields to rise a little bit. One thing that you saw this week, you saw New Jersey announce they're going to be basically raising $10 billion and New York $11 billion. They're going to do it through shorter term and longer term deals. These will come and there will be some give on those deals just based on the size. You're going to see probably more of this in other states that are now seeing the coronavirus have a relapse, the Floridas, the Texas, the Californias. This means that commerce is taking a hit down. This means that there'll probably be bond issuance on behalf of those states going forward. So we will watch for that. Next week, quiet week on the economic front. But one of the things that we're watching, and it is probably the economic statistic that people watch, are two things: initial jobless claims and continuing jobless claims. Those are the watchwords in the bond markets. And we want to see those continue to come down. That will tell you that at the margin we're making progress. To see them go back up is not a great sign. Congress still debating to put another $1 trillion to work on the behalf of state and local governments. We'll see whether they get that done. They can use it. So we end a quiet week in the bond market. We hope you have a nice weekend, and we will see you next week. Thanks very much.
Matt McAleer was unable to join us on camera this week, but he passed along these market notes. Biotech and Pharma, strong, solid week. Basic materials continue to rally. Large cap growth with mild pullback versus value. We have seen this action before and it was short-lived. Banks are key to value staying relevant as they produced a mixed bag of earnings this week.
The best defense against the virus is vaccine, which is curated, and treatments which are proven to help us. The second best defense until we get to the first is the truth, full data, full information, no blame game, no political blame game. The best defense for all of us is the truth. The more we have of it, the more we have it accurately, and the more our governments inspire confidence instead of destroying confidence, the faster we will be economic agents for growth. Markets will show the result and the economies will recover. Until we get the truth and the facts, we're not going to get these things. We're going to be languishing. The truth is what's needed now. Thank you very much. I hope your weekend is a safe one.